Hello everybody, Randy Patrick here. Time for Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Today is Thursday, July the 25th. Hope everyone's doing well. And look, right away we have a visitor. It's our resident bubble kitty here, and she believes we are in a housing bubble and we're going to have some problems as time goes on here. So here she is. She's making her appearance. And again, as I said before, apparently it's the timing of when I make these videos is when she hops up, if she's awake or not. She was just sleeping over there and she had to come up here and say hi. So there you go. So anyway, that's the scoop for today. We got lots to talk about. So first of all, if you're not already a subscriber, if you could please click the subscribe button on the bottom right of your video, I'd appreciate that. It helps my channel grow, helps me do what I do, which is great. Also, as I always mention now, feel free to reach out to me on your housing needs, whether purchasing, selling, looking for real estate investment, wanting to talk about distressed properties and things like that. There's a lot on the go today. And I know that I'm always in flux with people. People have called me, leaving voicemails. Best way to get a hold of me is via the email process, where I can respond to you and we can pretty much set up a time to talk. That's the best way to go about it, just to be upfront with you guys. Hard to work with the voicemail and stuff like that sometimes. So anyway, that's the scoop, and she's actually being good today. She's not doing anything funny. The information we're going to go over today is the zombie home crisis, vacancy tax, new home sales, home prices after the Great Recession, I guess you could say the next recession, cruel summer in the Hamptons, mortgage apps, and zero down is the way to go. And you can probably figure out what that means as we get involved here. So anyway, I'm going to get her off the table because it's going to be distracting. So see you, little kitty cat. Off she goes. All right, so here's the scoop. So there was a little report that came out the other day, and it talks about what we refer to as the other housing crisis. And, when we think of housing crisis, we think of affordability and lack of inventory and things like that. But what we're not talking about, because it's something that's not really, I guess you could say, on people's minds or in the headlines, it's what we call abandoned or vacant homes. So those are the situations that are going on now, and apparently it's quite an epidemic in certain parts of the country. So basically, you can find abandoned homes in urban areas and rural areas and suburban areas. They're all over the place. Where I live, I can drive around town and I can look at homes that clearly look like they're not being occupied. They're overgrown grass. Garbage cans are turned over. There could be sheets or tin foil in the window. Sometimes there's overgrown landscaping. There could be more than, there could be a lot of stuff going on, and she's going to distract me. I'm telling this right now. So anyway, come on. Let's get off. There we go. See ya. All right, so there could be a lot going on with homes. You can sort of see that something's up with them, that they're actually abandoned. So this apparently is significant number of locations across the country, like Detroit, Cleveland, Baltimore, Philadelphia, Gary, Indiana, Youngstown, Ohio, Macon, Georgia, Flint, Michigan. The thing is, these properties have been, I guess you say, vacant or abandoned for years. Sometimes they're called zombie homes. And zombie homes, and you've seen a lot of maybe, I guess you could say, reports on it, etc. They're abandoned homes. They're falling into disrepair. They're boarded up, etc. They don't always have to be boarded up, but you can see that the longer they sit, they're falling apart, and that's almost like a waste of opportunity there. So these homes are increasing. They're particularly increasing. They say there's higher vacant home rates in the Midwest and in the Northeast in particular. They sort of said that these are cities that maybe had manufacturing, mills, plants, or whatever, that for whatever reason those I guess you say employment centers are gone, have changed, and people have either left and gone away, possibly hit by the foreclosure crisis, etc. Homes are still sitting there, and it's just causing more problems. So a lot of the cities and counties get upset with respect to zombie homes or vacant and abandoned homes, and they feel that no one's taking care of the home, so it becomes an eyesore. It devalues properties. It could cause vandalism. You get home squatters, the whole bit. It's an eyesore, and people don't like that. So what what can we do to figure this out? Now, the abandoned homes, so why are they abandoned? Well, number one, they could be, already foreclosed on. What I mean by that is the lender has foreclosed upon them. They're sitting there doing nothing. They're just being held, and you can't get access to them because it's owned by a lender, and they have them in their portfolio, and what they're doing with them, we don't know. You may call the lender, but they're not available to be purchased at this point in time. Some people may have already bought them. There could be hedge funds that have purchased them, or other investors. They're just sitting on them and just waiting for the time when they see some price appreciation, or when they feel like investing the capital to move the property or get it fixed up, etc. So it could be owned by a third party, for example. It could also be people who are in what we call the pre-foreclosure status. So they are in the process of being foreclosed upon. That's taken a couple of years, and therefore it's not actually finished yet. So they still own it, they vacated it, and no one's there to take care of it, so therefore the property is falling apart or doesn't look nice, etc. That's some of the things that can go on. It could be out-of-state owner. Somebody is not able to take care of the home anymore. Second home, vacation home, whatever that may be. They just can't get to it, and they've let it go. It could be rental house, right? Maybe the rental house, lease or rent wasn't, new renter wasn't in there, lease wasn't extended. Tenants moved out, and you've got this home here. You don't know what you're doing with it, and you just sort of forgotten about it, and you've not taken action, and therefore it's fallen into disarray. Again, you can also have situations where it's an elderly person who had the home, they've moved someplace else, and they or the family hasn't had a chance yet to figure out what to do with it. It's become forgotten. It could be a probate house, a house that's it's gone through the probate process, and could be executor of a will hasn't taken a look at it, hasn't moved it yet. So there's all these reasons why we have vacant homes. The sad part about it is that they are opportunities, as far as I'm concerned. They're opportunities to fix the problems. They're opportunities to put homeowners in those homes, or they're opportunities for real estate investment to convert those homes into fix and flip opportunities to sell to retail buyers or to make as rental property, etc. So, and that's part of my discussion today, is that these zombie homes, and it's kind of a fun little term, zombie homes, but they're like, who knows what's going on with them? And for whatever reason, they're not being actioned. I believe there is some, I guess you could say, hesitancy on the ownership, if they're held by the lenders or hedge funds, to do something with them. And the reason being, they don't want them hitting the marketplace. They don't want homes that'll hit the marketplace, because that'll increase accessibility. It'll increase, I guess you could say, inventory of homes. And also, these would be lower priced homes that would help push prices of homes lower on the average in the area. So, it's a little bit of a control mechanism too. So as we all know, that this is part of the shadow inventory. So these homes that are taken back by the lenders are what I consider the shadow inventory, and it's being controlled so they don't hit the marketplace, or they hit the market when they want them to hit the market, etc. They're trying to maximize their asset and not disrupt the market and cause what we would call price changes or more inventory, etc., etc. So we're sort of being played with respect to that. It's at least my personal opinion. So again, foreclosures, have sort of leveled off nationwide. There's still, increase in areas, but these areas that I mentioned here, the Detroits, Clevelands, Baltimores, Garys, Macons, Flints, whatever, those locations still have a fair number of homes that are facing foreclosure. So, these are areas that have either been hit by foreclosure in the past or still have a lot of it now. And it looks like it's a difficult time for these urban areas or suburban areas, and they're having a hard time recovering. So that's the situation what's going on now. Comments are that, the idea is maybe to demolish the homes. So back, a number of years ago, Detroit had a number of issues in the city, and it just was more cost effective to demolish these homes. The city took them back. The city got their hands on them either through the condemnation process, eminent domain, whatever. They've basically taken the homes and demolished them, and that way they can package the land parcels up and make it attractive for developers to come in with a clean slate. So there's some thought of doing that. But there's a cost to the city. So whenever that's done, there's dollars to demolish a home. $5,000, $10,000, whatever that may be, that's going to cause a lot of money coming out of the cities or the counties. It's going to be replenished somehow, you see. So that's sort of a vicious circle here. For example, Gary, Indiana, believe it or not, is one of the worst places in the country. More than basically a third of the homes are unoccupied or abandoned. there's approximately 25,000 empty lots and 7,000 vacant buildings. So if you think about that, I mean, that's, there's an opportunity there to fix some of this, to get into some cheaper homes and maybe to do some great real estate investing, but something's got to trigger, something's got to give way here. And this is going on in many locations across the country. You just don't know about it because it's not forefront. We're concerned, as I said before, about rising prices and affordability. Well, here's your answer to all this, affordability. And again, where do we have the most unaffordability? In the first-time home buyer segment, in the sub 250K segment, and a lot of these homes would probably satisfy the needs of a lot of people in that price point and demographic. So again, my point is move them to buyers or move them to investors. And when I mean investors, I don't mean hedge fund institutional investors that are going to buy them at such a discount and sit on them and then charge premiums for them. I'm talking mom and pop type investors, your weekend warriors, the average real estate investor who'd like to move on a couple of properties and actually have that come back into the community. That's where it's more effective as opposed to the institutional investors actually getting involved with this. So again, the whole idea is to let's get involved with this, stop the problem. This will become worse as time goes on. As more foreclosures hit the marketplace, we're going to see a lot more of this, these vacant homes, etc. But herein lies the opportunity if you can figure out a way to get your hands on them, and I can obviously help you do that and talk you through that. So that's the scoop on that. So to sort of add into that, again, zombie homes is what we sort of call this. That's how they're affectionately known, and there could be a number of reasons why this is happening in various locations. To add sort of insult to injury here, there's some contemplation of what we call vacancy taxes. And what I mean by that is, it's in order to combat the affordability issues, like for example, some locations in California are considering adding an empty house tax. So they want otherwise known as a vacancy tax. Example, voters in Oakland, California recently approved a measure where they would tax as much as $6,000 per parcel. So parcel is what your house, your taxable folio, your parcel which your house fits on, all right, and $3,000 per condo unit on properties occupied fewer than 50 days per year. And the whole idea is to get those properties moving into people's hands, owner occupants, renters, whatever. And again, the proponents of these taxes say they will improve the access to housing affordability by keeping speculators from sitting on them and hoarding them, number one, and until they can rent them for a higher rate or flip them for a higher rate and get their bigger profits. So it's an idea where hey, let's see if we can move these quicker or we're going to tax you on that. So another kind of interesting concept here, how that flies. I mean, again, you bought the home, so if you own the home, it's your prerogative. I think what we're going to see is we're going to see more either states or local cities and counties take a look at things like this to try to combat and sort of subdue some of the affordability home issues, homelessness issues, just normal population issues. If people are moving to town, what's the scoop here? We've got places to put them, but they're not available. And I guess that's sort of the sad thing that's going on here. So when it comes down to it, our issues really are affordability, and that's the number one issue across the country as far as I'm concerned right now. Obviously the affordable housing segment to me is $250,000 and below, which is where most people can afford a home. Just to trend off a little bit here, new home sales picked up in June. So basically, purchases of newly built single-family homes actually increased 7% from the month prior. So from May to June, they increased to a seasonally adjusted annual rate of 646,000 units in June. That was the Department of Commerce said that this past week. The increase follows 2 straight months of decreases month over month. Now, don't forget, June to me is our starting of our summer selling season. You got June, July, August. To me, that's where we're going to see the majority of the sales for the year. As we know, people are moving, they're relocating, they're getting transferred. This is the time frame when they want to make deals, purchase homes, whether they're new or existing, so that they can, move, satisfy needs for schooling for their kids, stuff like that. So it tends to be the cycle and the year. So the number of homes for sale in June would last 6.3 months at the current inventory and pace, which is up from 6 months from a year earlier. So there's actually more homes available. The median sales price for a home this June was $310,400, and that basically was the same last year. It was $310,500, and there's no change in the median price. So what does that mean to us as buyers? Well, it means that the builders are offering more incentives or dropping prices to get people in those homes to buy and get rid of that inventory. So, we have not seen, so that's exactly, if the median home price doesn't go up, then we know that they're reducing prices and they're trying to flow through their inventory. I mean, they got to sell to make money. It's the only way builders can actually work these days. So that's something very interesting to see. So almost like new home, we've got a balance. So it's over 6 months of inventory in the new homes, which, is typically a lot of homes. And, again, a price point that has not risen in a year. So it's plateaued now. So what are we going to see in the future? Are we going to see some price decreases from the median? We'll see in the next little while. From a year ago, new home sales were up 4.5%. So that is actually good. The 646 units though was a I guess you could say expected sales pace is 659,000. So I guess that was lower than expected. So it shows that we are, again, the need for new homes is there, but maybe not the need for the people who really need. The need's not there for the people who want to buy them, still can't afford them. We've seen price points plateau now, and I think in the future they'll just probably remain plateaued. Maybe see some decrease until some of these builders can figure out how to reduce price points on their new builds, hitting that affordable home market a little better. But again, their situation, their complaints, their comments are, land and entitlement costs are up, material costs are up, skilled labor is hard to find. It's a lot of money as well. So, material prices are up. So it's being squeezed. Everyone seems to be getting squeezed at different angles here in the home building process. Okay, home prices a decade after the Great Recession. So a new report from Realtor.com says that on a cumulative basis, home prices have risen 50% since June 2009. So home prices are going up faster than incomes, and that's led to some affordability challenges that we see in the marketplace, said Daniel Hale, chief economist at Realtor.com. Now, just a point I want to make here. They're talking about this, and they're acknowledging this, which is an interesting thing. Back in the last housing crisis, I certainly felt that a lot of the stuff just wasn't, the information wasn't made available until too late, and it wasn't being disseminated appropriately or correctly across the board, and we just didn't know where we were. So we were getting sort of shell-shocked with information and seeing there's issues and problems. Now there's a greater recognition of what's going in the marketplace, but at least people who before were denying the existence of housing bubbles or issues are at least coming out saying, well, prices are rising faster than incomes, which, well, what are you going to do about it? I don't know, but at least the point is it's being acknowledged out there. So I guess you could say they add the country has seen more than 120 consecutive months of economic expansion, as well as wage increases over the past 10 years. However, you could say that that's still not equating to a lot of movement in existing home sales. It's not actually happening. But again, when you go back to the point where home prices has risen 50% since June 2009 on a cumulative basis. So, have we recovered? I think we've recovered from that point in time. So there you go. Okay, next, recession on the horizon. That's this, this article. So according to the experts at Zillow, they did a Zillow home price appreciation survey, and they talked to a panel of 100 real estate economists and experts, I got those two merged there, concluded that the next recession will likely be in 2020. Half of Zillow's respondents said the next recession will start in 2020. Around 19% said Q3 of this year would be the beginning of the recession. The rest felt that 35% of experts think the current expansion will end in 2021. So basically, there you go. So everyone knows that housing slowdowns are coming, the recession's coming, and they don't feel that the housing is going to be the cause of the recession, but housing will still feel the impact of this recession. And they believe that home buying demand will be significantly lower in 2020 than it is in 2019. So when you have home buyer demand that's slowing down and waning, what will we see? we hope to see decreases in affordability and price points. So again, this is Zillow, and this is what their, I guess, their economists and their surveys are telling us in the real estate marketplace here. All right. I had a couple of things I want to mention before I get to this one here. So as far as just an FYI, if you're looking to buy a luxury home in the Hamptons, now might be the time to do so, because this has been the worst quarter, or the worst spring quarter in the Hamptons in the past 8 years. So basically, real estate sales in the Hamptons and prices continue to fall in the second quarter, marking a year and a half of declines. And it was the worst second quarter for sales in 8 years. The weakness in the Hamptons is especially surprising given the strength of the stock market, which has usually signaled stronger sales in the affluent area. Prices could get worse since the number of homes for sale is growing. Apparently, there is 15 months of supply of homes in the Hamptons. Now realize that the average price point for a home in the Hamptons is like about $1.7 million. Like it's north of 1.5 million. It's between 1.7 and 2 million, in that range. So clearly there's a certain segment of the population that will be buying those homes. But the point is, the economy, the price points, it affects everybody. So even people who are affluent, who have the money, aren't going to overbuy and overpay for a home. They don't, they're going to keep their money. They're not going to overspend. They don't feel there's value there. So again, 15 months of inventory is a significant amount, and that's what we see when we have housing bubbles. We see that the mega cities, the luxury homes, are typically the ones that start to see the decrease in sales the most, the largest amount of inventory. And you can look on the news, it's like every other day there's a mega mansion somewhere in Miami, in New York, or San Francisco, or LA, Beverly Hills, that's listed for $40 million, that's dropped down to $25 million. I mean, you see these big, over the top developers, they set their price points very high, and they start doing drastic drops in price because the market's not there anymore and the money's not there. Or the money may be there, but they're not looking to spend it, because they don't see an upside, and then they might as well wait it out as well too. So it happens in all market segments, just as much more dramatic in the higher end. So again, 15 months of inventory in the Hamptons. Mortgage demand falls again despite lower rates. So what we say, and I say kind of every video, is the fact that tagline, despite lower interest rates. So why are sales slowing despite lower interest rates? Why are new home sales, plateauing despite lower interest rates? Well, it comes back down to affordability, everybody. That's the situation here. So regardless of what's happening in the marketplace with respect to rates, they've remained. They may drop a little bit in the next little while. We'll find out probably next week, I believe. But the point, though, is that we're not seeing an increase in purchase applications. So after rising the previous week, interest rates fell back again last week, but the consumers were not enthused. Overall mortgage application volume fell 1.9 for the week, according to the Mortgage Bankers Association. Volume was still 34% higher than a year earlier, thanks to a stronger refinance market this year, but purchase demand is continuing to decrease. So even though a year over year we're seeing applications increase, as they stated here, the majority of that is looking towards refinancing. So as rates drop, more people refinance. More people refinance, to me, that means they're not necessarily getting better rates, but they're probably taking equity out of their homes. And when equity comes out of their homes, they're either going to do home improvements, potentially, or pay off debt or use the money for something else, which means that home is really off the market. It's not going to come on the market. If they couldn't sell it, if you pulled it off the market, maybe you refi. Or again, if you're refi, maybe you don't have any confidence in the market and where things are going. You want to take your money out now and cash hoard or do what you want with it, and knowing that maybe you're not going to sell, and you got to wait to sell in the future. So we'll see what happens there. But again, very interesting to note that we're seeing more refis these days, and to me that's a telltale sign that what happens during a housing bubble at the peak. Well, again, people pull their money out, and then they usually pay the consequences after the fact when values drop and the market shifts. That cash out refis, home equity lines of credit were a big issue back in the last housing crisis, and was a big contributor as to where we ended up in 2007, 8, and 9. So keep that in mind. And the last but not least here, the article is zero down was really the only option. So this was a report from the Orlando Sentinel. It was a I should say, a little interview with some real estate agents, and a buyer. So the person was using a zero down loan through the VA, Department of Veteran Affairs, which, if you're a veteran, you have some of those benefits, which by all means you could use them. But the thought process, or I guess the comment was, if we didn't have a zero down loan, there's no way we could have bought this home. We could have put something down, but since we didn't have to, we just didn't. And economists are saying that's a relatively safe time to use the zero down programs as home values continue to rise. Well, again, I'm not too sure about that. I think we've seen some plateaus here. So if economists believe it's rising, then they're putting zero down, then your equity is building and you shouldn't have any problem down the end. Because remember, zero down home is zero down, and maybe you're going to bring some money for closing costs, etc. There might be a little bit of that. But if you have to sell, there's nothing, you've got no equity. So if I buy a zero down today and in 4 or 5 months or 6 months I need to sell for whatever reason, relocation, something's changed in my life or my family, if I need to sell, I'm negative underwater because closing costs, maybe some commissions are going to, that zero down, I don't have an equity buffer here. So I'm going to lose on that. Well, I'm not going to bring money to my closing, that's not going to make sense. So I'm stuck now. So that's where problems arise. So it's interesting that we'll see some of this, but the trend is growing for these zero down. So it says pointing out some urge caution, pointing out the programs usually have high interest rates and high monthly mortgage payments. As people have recovered, now banks are becoming a little more looser with their lending standards. And again, buyers who don't make much of a down payment are more likely to lose their homes to their lenders. Unfortunately, what we do find with people with less skin in the game, those are people who end up in foreclosure. Some mortgage people were stating maybe they lose their job, maybe they had a roommate, now the roommate's gone, the job's gone, something breaks in the house, and all they know is, and they say is, hey, I had $1,000 into the home or very little. I'm not losing anything. I can walk away from this, and it doesn't really matter to me. So, this is, again, to me, just realize that, again, these are government-backed loans. VA loan, USDA does zero down. FHA doesn't do necessarily zero down, but it's got low down payment. So these are the loans that are being sort of pushed these days, and people are qualifying for. They're opting for if they can. So what does that tell you? It tells you that no money's coming in their pocket, as they say, no skin in the game, which is more risky for everybody else but them. It also shows us that people are probably overbuying for what they can afford. So they can't find homes in a certain price segment, so they go up a level or maybe up a price point they never really expected to. In order to swing that deal, they have to do a zero down payment. Again, now they're exposed more, and as we said, no skin in the game, no risk. People will walk away quicker with less remorse because, as far as I'm concerned, you're renting a property. You're just renting, whether it's a new home or an existing home, you've now just rented with ownership. That's what you're really doing here. You've got nothing in the game. Heck, you didn't even put down first and last month's or security deposit. So you're actually better off than renting by taking a zero down loan, if you really think about it. So that's the scoop on that. So again, lots going on here, but for me, one of my main point for today was the zombie homes and the fact that it's one of those topics that really doesn't get much play out there. There's obviously a reason for that, and people would rather not talk about it. But when you take a look at, what's contributing to unaffordability is lack of inventory and higher priced homes. Well, we have solutions to bring that inventory back into the marketplace. And when that inventory comes in, it's lower priced homes that can, number one, solve a lot of our home buying issues for that affordability or affordable home segment, but also, bring some realization back to housing and, price points where it's more accessible to more people. Now, when I say stuff like this, I don't think people particularly like it. There's a segment of the world that doesn't like me talking about unaffordability, and they want prices to keep increasing. They want you to overbuy and put yourself at risk. Well, for that segment, if you think about it, if these homes came on the marketplace, that would stimulate more buying, more mortgages, more whatever. So, I don't think it's, there's a control method. This is being controlled clearly, but it's hurting the marketplace. So just think of the opposite. If it wasn't being controlled, or if it was being released in the marketplace, there'd be more people buying homes, and there would be more economy going on. As we mentioned before in other videos, when you buy a house, you don't just buy a house, okay? You say you have a mortgage, so the mortgage people make money and get paid. Title companies make money and get paid. Home inspectors and appraisers make money and get paid. When you buy a house, you go and do things. You buy furniture, you buy home furnishings, you buy landscaping, you buy lawnmowers. You do all sorts of things that add into the overall economy when buying a house. And that could really improve where we are today, but for whatever reasons, that's not accessible to a lot of people for some, as I said, under the radar reasons that I'll talk about in a future video. So anyway, having said that, everybody, again, appreciate the views, appreciate the comments and the likes. If you want, please share the video, help my channel grow. If you're not already a subscriber, please click the button to the bottom right, subscribe to my channel. That really helps my channel grow, and it gets me some profile out there, so I do appreciate that. And again, my tagline is never pay retail. This is what we're talking about now, talking about ways that we can get into homes at affordable prices and not overpay for things and feel bad about our purchase. So again, reach out to me if you want to learn more about the never pay retail concepts, and I'll look forward to talking to you later on this, or actually no, probably next week. Take care.